In the first week of March, stock markets in the United States were at their lowest point in over 10 years. Since March 9th, however, U.S. stock markets have risen over 20%, though they are still roughly half of their peak values from just over a year ago. According to a CNNMoney.com poll, over 60% of readers believe that this rise in the stock markets will continue into the next year, and the Obama administration would like to see this. The administration and the Treasury have taken great steps to bolster markets for some sort of recovery. Secretary Geithner just announced a program which will sweep $1 trillion of bad assets off of bank balance sheets. The stock markets in the United States had been gradually ticking up for most of March, but they took a major hit when trading opened Friday, March 27th. The Dow Jones Industrial Average lost 130 points, or 1.7%, in the first hour of trading. The Nasdaq and the S&P 500 fell by the same amount during that same time period. And this came after a 3-week-long charge off of the 12-year lows that were experienced just a few weeks ago. The charge off of these lows was largely driven by increased confidence and new investors. These investors poured their money into the markets, thinking that they were buying in at the bottom. The latest setback is another reminder that the stock market has no bottom. It is merely a gambling vehicle, a Ponzi scheme. As more people put in money, the values go up. As more people take out money, the value goes down. It is entirely possible that a major stock market could open tomorrow with zero listed value. The worst part of the whole thing is that the government actively endorses gambling in the markets. Instead of telling Americans to invest their hard-earned dollars in domestic energy plants, or high-speed rail lines, or education, which would bring material gains in the future, the U.S. government continues to bail out Wall Street firms in hopes of convincing the people to start buying into them again. The stock markets continue to be based on falsification and financial engineering. Financial institutions, banks, hedge funds, and investment services sell securitized mortgage packages which have no tangible value. When you buy into one of these companies by purchasing its stock, you are putting your money into a firm with no real assets. Instead of using the Treasury's limited resources or calling on the Federal Reserve to pump new money into the system, the government should be calling for massive and sweeping regulatory reforms. The last decade has proven that deregulation can lead to disaster when the institutions are left to fend for themselves. They feather each other's nests, coddle executives, and give gross overcompensation for jobs poorly done. The government needs a bigger and more affirmative role in the financial system in order to clean things up. And after that sector has been put back together, the government can relegate itself to regulations instead of direct involvement, as should have been the case before. In just over a year, the government has put itself on the hook for up to $10 trillion in guarantees to the financial sector, of which $2.6 trillion has already been spent. We need to make sure that this money is working for the right cause. On behalf of concerned citizens, I'm Craig Harrington. For more on this and other related topics, please log on to economyincrisis.org.
America, open up your eyes. Wake up, America, wake up.
Produced by economyincrisis.org.